This is News Talk 980 CKNW.
All eyes were on the big presidential debate on Monday night. Markets had a mild reaction on Tuesday, and now investors brace themselves for the next debate. The next bank problem, the next announcement from the Federal Reserve, and another central bank. So very confusing.
Yeah, sort of safe to say this is a precarious time for all the investment markets, to say the least. Let's bring in Michael Campbell, host of Canada's top-rated financial show, Money Talks, for more on this. And Mike, let's start with the big presidential debate. The markets had a little, a mild reaction on Tuesday, but can events like a debate like that really make a big difference to the various markets?
Well, this one didn't, and I think, no, I don't think they can generally. I think the media makes more of them than certainly anybody making a financial decision. But, I mean, there was, when there's no real definitive knockout going on with those things, the markets are also very confused by both candidates and their populist rhetoric. I mean, Donald Trump's anti-free trade, Clinton wasn't, but now she is. Both have a fair amount of anti-business rhetoric. Hillary's for higher taxes on business and upper-income individuals. Trump talks tough on Wall Street. He doesn't like the head of the Federal Reserve. It's like the entire election so far is, this kind of chaotic kind of approach. I mean, who the heck knows what's going on?
It's like a reality show.
Yes, it is. Well, yeah, there you go.
We're going to have a ton of time to talk about this as it goes on, but what about the impact of a general election itself? How's that going to look come early November, sorry?
Well, I think Hillary's a known quantity. I mean, she's the establishment candidate. She's the business as usual. She's been supported by Wall Street despite her rhetoric, whereas everyone has pictured Donald Trump can go off in all sorts of different directions. So I think she would be the one that the market would be happiest with. But I still say the big picture is different. I mean, both of these people have record levels of disapproval ratings. I mean, it's so high there. The election of Trump, I think, is going to just exacerbate the declining confidence of government, and I think the election of Hillary will do that even more so because she's the establishment and status quo candidate. So I think the big picture is neither of them are going to get away with changing the major trend, which is going away from government, going away from confidence in government, and that's going to move all the investment markets.
Yeah, I was reading today that our Canadian leaders sort of confabbing about what the potential Donald Trump presidency might look like and going through both of their platforms to see how it impacts Canada. So that'll be interesting. I mean, we'll be impacted for sure.
Well, it's really negative when he says that, NAFTA was the worst trade deal ever made in America. By the way, I like the Onion's quote that said, no, it wasn't. The trade of Scottie Pippen to Chicago was from Portland. Anyways, but, he's been very consistent in being anti the trade agreements. Canada's mentioned several times by him. Hillary Clinton's in a difficult position in that way. She's really started to talk the anti-trade game, especially when it comes to the Trans-Pacific Trade Deal, which she used to say it was the gold standard, but now she's turned away from that. So, I think it's again, that level of uncertainty what keeps popping up here is what is it going to be like, especially under Donald Trump.
Let's talk about some of the wild cards in the view here. You've been talking a lot about the problems with Deutsche Bank. What's going on there?
Yeah, a great point, because this is, of course, Europe's dominant bank. Germany's biggest bank, along with Credit Suisse, is another big bank there. But they've got huge financial problems. I mean, this has been in the financial news for a bit. But look, I'll give you a quick hint. Their stock's down 74% in the last 2 years. And it's really a legitimate worry whether they're going to be able to survive. I mean, so much so that Angela Merkel made a comment, I think 2 days ago, saying that if the bank went under or had some problems, the government wasn't going to bail it out. Well, we're not making those statements in Canada about our various banks. It's because it has a real problem. And the problem stems from they've got huge exposure to the futures market, the derivatives market there. It's a global exposure, so this is not just a European story. It would have huge ramifications, I think, much like Lehman Brothers did in setting off the credit crisis. This is a big one. And we just had today, by the way, the head of Credit Suisse, which is the other big European bank, say that European banks are uninvestable. There's too much uncertainty. He went on to say, and I'll quote this, only a fool would try to make a 5-year prediction in a world that is so random. And I think that's really the problem. And the presidential election, going back to that, doesn't solve any of that. I mean, it's certainly going to bring in more randomness, or at least more uncertainty.
So is that why the Federal Reserve isn't raising rates? Because we keep thinking it's got to happen sometime.
Yeah, absolutely right. I mean, they keep talking about doing it. We didn't do it in September, so now it's going to be December. But remember, a year ago, they said they'd raised them 4 times from these unbelievably record low interest rates in the U.S. and, of course, throughout the world with negative interest rates. But, yeah, I think that's exactly what worries them, that the U.S. is sort of becoming the de facto central bank to the world. When the U.S. makes a statement, every country pays attention. And every country's markets react to it. Every country's currency reacts to it. So I think that's one of the challenges they're under, and they're looking this level of uncertainty, and they're just having trouble pulling the trigger on that. But let me just throw one more thing, because it's going to be the biggest problem facing us, is that's the entitlement crisis. Keep in mind that there's, a lot of pensions are under the mandate. They have to hold a certain level of government debt. Well, gosh, if you're getting negative, let alone, or 1.5% or something, that isn't going to work for the pension thing. And just back to the presidents again, one of them is going to inherit a huge entitlement problem that we're going to see a lot more of between 2017 and 2021. We've already started to see it with Detroit, Puerto Rico, Atlantic City, Stockton, et cetera. But I'll tell you, these record low rates are really hurting pensions. But as I say, on the other side, if the Federal Reserve raises them, you're going to see a higher U.S. dollar, lower Canadian dollar, implications throughout the world. So, yeah, it's a tough situation.
Mm-hmm. All right, let's bring it back to individual investors. What do we need to be looking out for?
Well, I think we just have to appreciate there's a level of risk. So, I mean, it's hardly, big earth-shattering advice, but I do think that people should regularly look at whatever investments they hold, whatever debt they have, and make sure that it's affordable on the debt side, and they're not taking more risk than is appropriate on the investment side through this kind of uncertainty. I do like that quote by the head of Credit Suisse saying, trying to predict the next 5 years is only a fool would try and do that. That's the challenge. And now, speaking of fools, I'll make one. The volatility is only going to increase.
Oh, man, interesting times. Thanks
Absolutely.
so much, Michael Campbell.
Thanks.
Vancouver's News, Vancouver's Talk. This is News Talk 980, CKN.